Welcome to Insights. I'm Eric. Thanks for stopping by this morning. We're going to talk about the soybean market and grains and a little bit of the US dollar here, mostly because of topics of conversation that I've seen come across here and there that now that we've moved a little bit off of the low and perhaps people are looking to take some profits. What are we supposed to be doing that in terms of the evolution of the trade as well? And I think we need to go over some of that. We saw soybeans organize into a reset. The evolution of the trade is a primary trend following technique. It's been up for 16 months and 46% in that time frame. Within that time frame, the daily can go down, the weekly can go down. We can enter consolidation as long as the primary trend stays up. The trend path of least resistance is up. We'll say the trend is up as well in terms of what we're following in the evolution of the trade. Now, soybeans just recently was from down and down in daily and weekly has turned back to up. It turned double up 14 days ago in a reset. And last week it organized to triple up, which is, so this one's not even that old. We're a couple this is going to be the third day into that the trend that finished off right before the Christmas break, and we're looking at a market that's rallying. Is this something that you need to take profits from? So we look at charts, and we've seen for the last couple days, 14 days ago, this entered double up, so you can count back from where we are. And last week, somewhere around, well, you'd say right about here, this thing finalized and went to triple up, so it's strengthened. So now we're supposed to take profits at least, and that's the discussion pushing around some trading desks. And I would say, according to the evolution of the trade, there's no reason to be doing that. Again, this is a cycle driven. They're taking profits is based on anything that in the daily or weekly cycles. The time or the price cycle is here on the daily. The time cycles here on the daily, and we can go down the list here. We can see them for the weekly. That's BUS. BU for bull, S is the standardized, BUST for time, and that's also standardized. All of them are below zero, which means that none of these cycles across any time frames, the only ones that are above zero are the monthly, and these are not dangerous yet. These are painted blue as kind of like a heads up, and they will be painted red, and then they will be bolded red. So as this thing moves and moves through the cycle of time, that's why we call it the evolution of the trade, evolution of the investment, whatever you want to call it. This is a trading discipline that applies to everything that we follow inside the matrix. There really isn't anything in the daily time frame that would spark a profit-taking event, anything that would trigger any type of sell-off shorter term. These are just, they're still below zero. So the price cycle is just, it's not big enough yet. The time cycle at 14 days is still below the norm. These can go, and these, to even raise any type of eyebrow of concern, these have to be turned blue. And I don't really get too concerned at blue. Red is usually the first layer of concern. So this is, I don't want people to be too quick to be pessimistic on a trend that's finally organizing. That often happens. You get into a market that's beating people down for quite some time, and they look to get out, and then they say they get out too soon. They don't establish and keep the core position. It's really just how do you factor in your overall trading discipline? How do you manage your leverage and your risk in order to do that? But this is full triple alignment. The composite score X bar for the composite trend, which is the cycle score, and still below zero. The computer designates this as early. I don't know what people want to see when they, other than that, this may be a reflection of climbing the wall of worry, and there's plenty of worry, and we're going to take a look at that in a second. We can see that in the daily price sticks, whatever people follow. Look at these periodically, and just as something to entertain myself, I study the fractal trends and the composite trend more than I do a daily chart or a 15-minute chart, a 30-minute chart. These are pushing through resistance zones. As we go through, we pull soybeans in the reversal tabs. I focus on the weekly, and I recommend people focus on that. It's a balance between too much information and too little information. And you can see that we're pushing around that 2310, 2315 on SOYB, which is the ETN we use to track. We don't track the futures and options because of rollover and also and timing delays. So we use this ETN. I know it's not perfect. It doesn't stay in the front month too much, but it does represent the general secular trend. It's caught all that. It's recognizing that we are going back into triple alignment. So this is what we use. It's caught here now at this zone. It needs to get above 23.25 and then a little bit above or 23.44 and 23.50 and then 23.55 to 23.66, which is probably another layer up in here. I think once it clears that, once it clears above, right, I mean, it's right about here. This one is really going to jump the creek, but you can see there's a lot of work to be done. And when the computer draws the weekly reversals, and we'll zoom in on this to take a better look, we can see that how much work there is to be done. Price is above a reversal zone. The reversals are highlighted or painted green. If it's below it, they're red. And there's a lot of activity here. There's a lot of work. There's a lot of congestion. You can see that. There's not a lot of air pockets. If we can get above this top band here, though, then it might free itself. There might be a reversal up in here. But the less reversals and less work there is to be done, the easier trading goes, and the better the chance that you have for acceleration. It's difficult to accelerate in tight bands, and these are the tight bands when we zoom in and draw them for ourselves. And these are things that you can follow inside the matrix, inside the reversal tab. You can just recognize that there's a lot of action, and then when you draw them or visualize them yourself, once it clears a band, if it does do that, then it can really take off and really accelerate. And since all the cycles are relatively young, they're negative, they're below zero, the chance of acceleration is still quite high. We're not even that far removed from compression. We 47 and 40 are still pretty low numbers. And I know people are worried about energy, and we're going to talk about that in a second. But this has a chance to jump the creek above this level. But will it do that? It might have to back and fill. It might chop because there's a lot of work to be done. But do you take profits because of the fact that it's inside the congestion zone? I think what you do is you recognize you're in a congestion zone. It's just going to be a struggle. It's going to be a slog. If you fail here, you're probably going to come down here. If you fail this one, you're going to come down to this one. But all of this in this area represents really trading noise. It's not going to turn the alignment of the trend back down from triple alignment to consolidation. I think it would have to fall below here before you would even lose the daily. So this is really trading noise. Do you take profits in trading noise? You take profits when the cycles are extended, and there's none of that. Or the energy build is weighing against continuation, either in the form of a blocking dome or a big enough and long enough energy build or a series of bearish energy builds that can reverse the trend. And if we slide down here, we can take a look at today's energy build. It's 1 and 63, and you can find this information right here inside the matrix. I know I'm leaving this one open, but anyone subscribes in the future, you can follow this stuff on your own. And we also do a soybeans report that talks about stuff in much more detail than this and goes into a more advanced strategy. This is just an open discussion based on what's taking place from double up to triple up, and should everyone be worried. I know that the energy build is falling, but this represents distribution into the rally. That's quite common. The one thing that I have noticed that's a little bit of a concern is that WA hasn't moved much. It's still below 20%. It's really 12%. It's 112 scaled upwards, but that would need to pick up. That often picks up when a rally is taking place. It shows force. This tells us that there's a general lack of conviction still, and I know people are worried that somehow DI is going to drop to below minus 60 here and do that in 2 weeks. But that's not something that tends to happen overnight. And even if it did, it's not a straight line. It doesn't go straight down a fishing line and then it's going to back and fill. And remember, you still have to pull DI2, which is at 63, and oscillate this thing all the way lower, which you're talking about a 3-month minimum process, maybe even 6 months to do that. So this has a lot of bullish energy still left in it, and it's going to push that. So even if it wants to back and fill inside this zone here as it plays with these reversals, there's plenty of energy at the disposal. And so there's nothing there that would say, well, we have a blocking dome or we have enough energy to reverse that. It just doesn't exist. And the fact that the daily cycles and the weekly cycles now have both been reset. Now is not the time to be pessimistic. Now is the time to be patient as best as you can. Patience in terms of the primary trend, which has been up for 16 months and 46%. But as long as the composite trend is organized and focused, even inside this heavy congestion zone, which shows up right here and it shows up right here, this is there's plenty of energy to work through this. It can be a slow slog, it can be a frustration period, yes, but in general, these are the types of setups that climb the wall of worry, and this is what it looks like. I also included the dollar index before I close this out. We can talk about this a little bit. The dollar is no longer in triple alignment. It's down on the daily. But we have to be careful if the dollar comes back into alignment here, considering that the weekly cycles are here and here, so they're pretty low, and the monthly cycles are very low. That if this reorganizes and resets again, this could be even more powerful. And since all markets are related, what I get concerned is that 2022 generates a powerful rally in the U.S. dollar, which will have implications on not only debt and consumer confidence and the world's financial systems. It could spill over into the commodity markets, and soybeans is just one of them. It's just something that I would keep an eye on. There is a US dollar report that's out there that was just generated that talks about this. I'll be updating it. I've said before, it could be the most important report that's for 2022. And judging by the way the public is in their level of preparedness and the interest in the U.S. dollar report, it looks like the majority is going to get smashed on this one because they're just not even thinking it's as much of a concern. People don't look for information until things are going bad, and I'm thinking no one's too worried about the rally in the dollar. They think it's coming down. I've watched the internet. The internet doesn't think this is going to organize and stay. But I caution if this resets again, this is going to put people down, and it has the potential to spill over into the agricultural sectors and the commodity markets, and those are things that we need to watch. But for now, the soybeans, that's what we're talking about here, there's just nothing here. It is positioned to climb the wall of worry because it has plenty of energy and the cycles are not extended. So that's really what we wanted to communicate. If you have any real questions or anything, anyone who subscribes, let us know. Anyone who's considering it and wants to know more, this is what we talk about in reviews, and reports go deeper than that. And I don't know better trading tools out there than than the matrix itself. A lot of people talk on the internet. A lot of people change their mind. The matrix is it's something that I don't have to talk about. You can follow this and learn to follow it yourself. And it's a trading companion. It's an investment companion. And it helps to understand things that people just don't talk about. And cycles and energy are some of those things. There's too much conversation about things that really don't matter in terms of trading and investing. So if you have any questions, let us know. You can come back to the website and we'll talk about pretty much anything, or you can contact us on social media as well. If not, thanks for watching the video and enjoy the rest of your holiday shortened week.